Welcome to the Fintech End of Year Wrap Up for 2018. We're keeping up the tradition of donating to the Kids with Cancer Foundation instead of sending out Christmas cards, and we hope you enjoy this message. It's been a fantastic year, but with lots of disruption, change, and opportunity. In this message, I'll cover the disruption that's happened in politics, both here and overseas, in investment markets, and as a result of government regulation. Firstly, politics. In Europe, the Brexit no deal has left Britain in a precarious position. And in the US, midterm elections saw Donald Trump avert disaster by winning just enough seats in the Senate to maintain control. In Australia, Scott Morrison became the 30th Prime Minister following the ousting of Malcolm Turnbull. A federal election is likely to happen in May 2019, with the Labor Party and Bill Shorten clearly ahead in the polls at this stage. This has meant that banks and bank shares and property prices have come under pressure following Labor's proposal to cut benefits for tax benefits in franking credits, negative gearing and capital gains tax. The second area of disruption came from government regulation this year, and a raft of royal commissions looked into things like child sex abuse, aged care, financial services and the banking industry. The latter has seen 3 out of the 4 major banks announce they are exiting wealth management. The banks not only owned their own investment platforms and financial products, but they also employed the financial advisors who, lo and behold, were incentivized through sales targets and bonuses to sell their own products, not always in the best interest of their clients. Thirdly, investment markets have been disrupted by a dramatic increase in volatility over the last couple of months, meaning a downward correction in the share markets and no Santa rally for 2018. It's more like a case of Frosty the Snowman. But this has mainly been driven by the US Federal Reserve continuing to raise interest rates. Economic growth and employment in the US has been strong, and the top 500 companies were trading above fair value. So the combination of another increased interest rate and overvalued shares, concerns about recession, Brexit, weak global growth in Europe, US-China trade relations and a market sell-off tipped it all over. We know the fear and greed inherent in human behaviour causes markets to overreact on the upside and overreact on the downside. However, we don't see a full-blown global recession coming. Growth is expected to be subdued in the first part of 2019, but as we go through the year, we expect to see another pickup in global economic growth. Inflation remains low around the world, and interest rates in the developed markets are likely to remain at low levels for now. So what does this mean for you? With all the changes causing disruption, great opportunities emerge, and we're prepared for those. Fintech Financial Services utilises the leading research houses and asset managers from around the world to harness these opportunities for you. We also own our own Australian Financial Services Licence, or AFSL, with no alignment to any big institutions, banks, product providers or investment managers. We continue to look at the best value and highest quality investment platforms, research providers and investment options for you. Following the Royal Commission into banking, this landscape is changing, so we will keep you posted when the opportunity to bring better value and lower costs arises. Very importantly, FinTech delivers additional value to you through comprehensive strategy advice. We're all about securing your future. Internally, our most valuable asset is our people, and FinTech continues to grow and prosper with the same great team working for you. So with Christmas upon us again, we hope you enjoy quality time with family and friends, and we're looking forward to working with you in 2019 and beyond. Thank you.